to this course, I thought my fundamental analysis was very good, and I thought my technical was fairly okay. But after this course with Jay, he really highlighted a lot of basic things and also certain in-depth things that was related to the current industry. And I can see that it was something that is really enlightening, and it was a really good course that I would recommend to everyone who wants to instill more knowledge on technical and also fundamental analysis. And yes, definitely I will recommend it to most of my friends who are in this industry and whoever who is interested in stock analytics. Thank you.
Hi, good day. My name is Potong. I just attended MIW. Okay, the key things I took away actually is two things. One is a framework to actually use fundamental analysis and technical analysis and how to synergize them together such that you can actually look for value stocks and for you actually to catch on the opportunities for the shares actually trending higher or lower. And the second thing that I learned is not a lot of other courses in all those other big courses will actually offer you is actually position sizing, because in this case most of the investors will try to jump into a position right away after a jump out with their entire position out in this case. What Jay actually taught us is actually to do it in sizes such that you can actually catch on your opportunities, and as well as allowing another portion of your investment to actually to ride onto the trend itself. And this can actually eliminate the psychological biases that most investors will actually fall into it. So therefore, based on these two key learning lessons, I would highly recommend you to actually take in MIW. Thank you.
Hi, my name is Zhao Peng, and I actually benefited from this course MIW. It actually taught me a lot about the fundamentals of the stocks evaluation itself. It has given me like a strong foothold and a blueprint. If you are somebody that wants to know how to invest but do not know how to start, then MIW actually offers a very good stepping stone, a foundation for you to go step by step along the way. Of course, there's always support and helping hand from our trainer Jay. And also, how is it different really from the other courses is that MIW doesn't just give you a signal of buy or sell. Some other courses they have that, but it actually teaches you at a fundamental level how to analyze your own stocks, whatever you like, and also you can make your own judgment call. So at the end of the day, they are teaching you how to fish rather than giving you the fish itself. So I would recommend that to anybody who wants to start investment on their own.
Okay, so through this course, I've definitely learned a lot. Like, for example, on how to evaluate the stock, not just on the technical part, but also on the fundamental part. And also, most importantly, my true objective in wanting to invest. Because Jay has actually emphasized a lot on what are you looking for out of an investment. So I guess all of these are my main takeaway from this course. And I also definitely recommend this course to my friends because I think
it helps to break down investment into very simple parts that all of us can understand, whether it's beginners, amateurs, or those who are just keen on investing. Yeah, actually, Jay has a point system to help us evaluate whether a stock should be a good pick or a bad pick. Yeah, so all of these are very easy to follow steps for people who are keen on investing. Thank you.
The digital world is ever-changing. With more than 20 years of experience in serving the investing public and the financial services industry, Cybercode has been providing financial training and information technology solutions for established clients. Cybercode is based in Singapore with 7 offices around the globe and continually expanding. Being ISO 27001 certified and having a proven reputation for service excellence, Cybercode endeavors to build long-term relationships with customers and business partners alike. Our services include, but not limited to, the following: investing public, to provide training programs to the public, such as investment and stock trading courses. Financial professionals, providing up-to-date training courses for the finance professionals, keeping them well informed with compliance, regulatory requirements, financial products, and best practices. Financial technology. We develop and provide information technology solutions and management services, curated specifically for our clients' needs. Cybersecurity and data. We provide data, information, analytics, and cybersecurity services to your business, keeping your data safe. Since our inception, we have trained thousands of participants among the investing public, financial professionals, hundreds of B2B clients, and have continued to forge strong business partners. To find out more about what we do and how we can help you, contact us today. Cybercode is a leading financial training provider and a leading developer of information technology solutions and management services.
Hello, hi, my name is Abby. I just finished the MIW course, and what I can say that prior to this course, I thought my fundamental analysis was very good, and I thought my technical was fairly okay. But after this course with Jay, he really highlighted a lot of basic things and also certain in-depth things that was related to the current industry. And I can say that it was something that is really enlightening, and it was a really good course that I would recommend to everyone who wants to instill more knowledge on technical and also fundamental analysis. And yes, definitely I will recommend it to most of my friends who are in this industry and whoever who is interested in stock analytics. Thank you.
The Institute of Banking and Finance, or IBF, was established to foster and develop the professional competencies of the financial sector. IBF is dedicated to empowering practitioners with capabilities to support the growth of the Asian financial industry. It is the national accreditation and certification agency for financial sector competency. Developed by the industry for the industry, IBF Standards is a set of competency standards benchmarked to international best practices. IBF's vision is to be the Asian standard of excellence for practitioners in finance. IBF Standards covers 13 industry segments and offers a wide range of development roadmaps. IBF Standards offers accredited programs to guide a financial practitioner from licensing examinations to professional certification. IBF Standards certifies financial practitioners at 3 levels. An IBF qualified individual is one who is equipped with a broad base of capabilities and foundational competencies to undertake new roles. An IBF advanced individual is one who has acquired applied knowledge and complex analytical skills for specialists or leadership functions. An IBF Fellow is an industry veteran who has demonstrated professional mastery and exemplifies thought leadership and commitment to industry. The IBF certification mark, a set of parallel elevation bars, symbolizes the close partnership between IBF and the industry. IBF certification is therefore an industry-endorsed mark of quality that recognizes individuals who exhibit professional excellence, integrity, and commitment to the industry. Be part of the IBF community of certified financial practitioners. Participate in continuing professional development programs. Avail yourself to learning resources to plan your career. There are also opportunities for mentoring and networking. IBF, the Asian Standard of Excellence for Practitioners in Finance.
Hi, good day. My name is Kotong. I just attended MIW. Okay, the key things I took away actually is two things. One is a framework to actually use fundamental analysis and technical analysis and how to synergize them together such that you can actually look for value stocks and for you actually to catch on the opportunities for the shares actually trending higher or lower. And the second thing that I learned is not a lot of other courses in all those other big courses will actually offer you is actually position sizing, because in this case most of the investors will try to jump into a position right away after a jump now with their entire position up in this case. What Jane actually taught us is actually to do it in sizes such that you can actually catch on your opportunities and as well as allowing another portion of your investment to actually to ride onto the trend itself. And this can actually eliminate the psychological biases that most investors will actually fall onto it. So therefore, based on these two key learning lessons, I would highly recommend you to actually take in MIW. Thank you.
So when I came upon this topic on called behavioral finance, I started to realize that the crux of a successful investor or trader is not about selecting stock. It's about managing the portfolio of stocks they own. We manage the risk, not only just managing the risk, we also manage the psychology of ourselves. The only best way to service to a client is really through a standard process, guidelines, and also to understand what the client really needs and automate and update. And this will generally help clients not only to provide the best service for clients, but also to help clients to gain wisdom, knowledge, and getting the best investment decision for themselves. So that this is what I do normally. The perfect strategy to me is a unique strategy that fits to the person's objective and wants.
During this class, Jay actually shared a lot of his personal experience and made certain concepts very clear to me. Like what is a trend, what is a momentum, causes actually help me to understand the technical analysis and also the fundamental side.
He's able to convey very effectively the substance and the knowledge. I find him very pragmatic and his approach is very prudent.
Join my course and learn how to make your investment work for you today.
The IHSG Advanced Manufacturing Index tracks diversified returns over the first 7 weeks of 2024, seeing 22 million Singapore dollars in combined net institutional outflow. 25 largest weights of the manufacturing index saw varied performances from a 31% decline for NEO to a 24% gain for Food Empire. ST Engineering currently maintains the highest weight within the IHSG Manufacturing Index. ST Engineering reported its revenue grew 12% year-on-year to 7.3 billion Singapore dollars in third quarter of its financial year and generated a 21% total return in 2023. The stock has also marginally gained by 0.5% over the past 7 weeks. Venture Corporation has booked 43 million Singapore dollars of net institutional inflow over the past 7 weeks, the highest within the index at the constituent level. Currently, it is the fourth largest weight of the IHSG Advanced Manufacturing Index. Venture Corporation also maintains its net cash position has improved over the past 4 years, reaching 956.5 million Singapore dollars as of September 30th. Scan or click the link in the description to learn more about these stocks or join SGX Invest on Telegram for the latest news update. Please note this is a general commentary of historical performance and not necessarily indicative of future performance. Check out our investment courses that are up to 70% subsidized at cyberquote.com/sg or contact us at support@cyberquote.com.sg.
Hi, a very good evening, ladies and gentlemen. Thank you for tuning in for this Tuesday evening webinar session. The webinar title of the webinar title, live webinar title of dividends, bonuses, and rights, and how to handle corporate action. Question mark. With our keynote speaker Jay Chow, wealth manager from Philips Security, and also the IBF accredited trainer who teaching one of the course called Making Investment Work course. Well, this is also one of the pioneer course that Jay Chia, our wealth manager, has been teaching since more than 10 years back, right? Right before the IBF accredited till now. So please stay tuned to the end of session. Myself and Jay are going to share with you how can you benefit from this making investment work cost, as you can get cost subsidy up to the 70% cost subsidy. And he's also one of the associate trainer with Cybercode. Now, do allow me to do a short introduction of a company. Now, of course, we played the corporate video earlier on. Of course, those who've been following through with Cybercode, you get to know that Cybercode, we start off our business since 1996. So this year, stepping into 28 years and more years to come with your continuing support. Thank you very much, right? For those who are following us, Cybercode, for those who are following you, Jay, right? Thank you very much. Now, also, apart from we're doing on the corporate, this B2B, we're also providing financial, CBD courses as well as IT penetration vulnerability access to the corporate level, right? Now, of course, let me also talk about a little bit of keynote speaker today as well, Jay. Now, of course, Jay, in fact, this year will be stepping into his 18 years with the business, with Philips Security. Now, indeed, Jay is a very unique individual where we joined the first 3 years of his business. He start off as a trader, and then sooner or later he found out that he is more geared towards a more suitable to become an investor, and then therefore he become an investor after 3-4 years of his business. Of course, this year will be stepping in his 18 years of his business. So apparently holding a position of a wealth manager. I think as of today, it should be in the range of about close to over $1 million in terms of asset management who are managing on behalf of his client. So he's a stockbroker himself, so doing very successfully. And of course, Jay believe using both fundamental and technical analysis, in short we call FATA, to form his marketing site, which is not many trader or trainer in Singapore use both fundamental analysis as well as technical analysis to form the marketing site. Indeed, Jay, he has a strong talents on that, right? So please do ask him as much as possible a question during this 2-hour session, right? It's a short 2-hour session. We want to make it more interactive. We want to make it more fruitful for all of you here. And in fact, today we also connected into Facebook Live. For those who join via Facebook Live, you are more than welcome to post your question in the comments column. For those who are joining via the Zoom, of course, you can always post your question into the chat or Q&A. So in the appropriate time, of course, Jay or web manager will provide the reply. So please stay tuned to the end of session. Like I say, we're going to share with you how can you benefit from this making investment work course, right? So without much delay, I shall pass the mic over to Jay, please.
Yes, thank you, Andy, for your introduction. A very good evening to everyone. Thank you for joining me in today's evening session, and I hope that I'll be able to teach you how to handle corporate actions. Now, corporate action is something that a lot of my clients usually like to ask me. In fact, we have been going through the past few months where a lot of companies have issued corporate actions. And being in the industry for so many years, this is one of the best things that I can help clients, because a lot of clients do not know how to handle corporate actions. So in today's session, I'm going to share with you particularly in 3 corporate actions and how can we make best use of it, and how can we avoid any pitfalls in certain corporate action, which I think it is the most important thing when you come to corporate action. And being in Phillip Capital for so many years, I'm very thankful that through the company, not only I can serve my clients, but also have opportunity to serve the company by representing the company in Invest Fair, SGX Connect, or SGX events. And very often at such events, many people approach me and discuss about stock market with me. And very commonly, what they discuss about is hey Jay, I have this stock, the share price has dropped to a particular point, what should I do about it, and so forth. I can help the person, I can answer, but the answer will be limited to based on what has happened in the market at the moment. So over time, I realized that if we go and attend 1 hour, 2 hour or so or short session, we will not be able to grasp the full picture of how to make the investments work for you. Yes, indeed, because of this, what I've experienced, I noticed that it's important to get every individual to have the full picture of how to make best use of their investment. And very often, a lot of them spend a lot of time watching a stock market. In fact, I deem it as they are working for their investment. Like my title of the course that I created, Making Investments Work, means that we will literally let the investment work for us, not the other way around. And I'm very thankful that IBF has accredited this course, because having IBF accreditation, this marks that whatever I'm training is not solely just based on my personal experience, but it is also based on what professionals are using in the market. IBF stands for Institution of Banking and Finance, which many professionals like me are to attend certain tests or exam before we can qualify as a professionals in the market. So having this accreditation allows me to train a lot of other professionals in the field, from area of stockbroking business and to the area of financial advisors, so that we can uplift the financial services standard to every individual. So with the short introduction about myself and what is the background of today's topic, but I think it's important for me to go through the standard disclaimer and limitation. Very simple disclaimer and limitation. First of all, I will bring a lot of past performance as an indication to teach you how things happen and what is the impact on certain things. So please do take note that past performance may not be the best indication of future performance. As far as possible, I want to use as current data as possible. And I will be focusing on Singapore market because in the whole world, there are so much different kind of stock market that's available. Primarily, a lot of people like to speculate in the US market, but I prefer to teach something closer to heart, something the majority of us will be able to see and able to hear even around us very often. And lastly, do consider a risk profile, especially whenever I share anything, any company. It does not constitute advice to buy or sell any shares. But more importantly, strongly believe that God has made every individual to be really different. So our risk profile or the risk appetite we have is going to be different. So before you want to make any investment decision, please do consider your own personal risk assessment. And lastly, I pride myself as an investor in the market. So at all point in time, definitely I will have invested position. So at sometimes I will be talking about some invested positions that I have, but please do take note that this does not mean that I'm encouraging people to buy or to speculate into the stocks that I have. So more importantly, look into your own personal risk assessment again. Okay, so these are the simple disclaimer and limitation that I have. But I want to also make this session to be more fruitful for everyone, because normally when I prepare is based on what I guess what you guys want to know. But I think the best way is to use the Zoom meeting Q&A function to ask me questions, so that I will know that these are the exact kind of questions that you want to know. So at any point in time when I go through the whole session, if you have any questions, please feel free to ask. And at appropriate time, I will take some breaks and I'll use the break to ask you guys to post me questions, and I'll use the time to answer the questions. Okay, so let us start off to talk about what are corporate action and how do we understand corporate action. Well, first of all, why do we need to know corporate action? Recently, in recent months, one of the biggest talking point in the market is actually DBS shares. And DBS shares surged very strongly during the month of February. And when it surged very strongly during the month of February, many people ask, hey, how come the share price of DBS went up so strongly? The main reason that is being discussed in the market is because DBS is offering one bonus share for every 10 existing shares for every existing shareholders. And not only that, they also offer higher dividend payout. Wow, there are free bonus share. For every 10 share, I'll receive one free share. And not only one free share, I will still get a bumper or higher dividend payout. So this definitely draw a lot of attention to a lot of people to want to buy into DBS. However, like this reporter Leslie E, he put a very interesting title in Business Time. While bonus shares are largely a gimmick, DBS proposed issue is a boon. Wow, what does it mean? What does it mean by a gimmick? Really, DBS give bonus share can become a gimmick? It may not be DBS, it can be any other company. So this boils a lot of question to the market. And after DBS announced during the month of February, I received a lot of phone calls from my client. A lot of them ask me, Jay, so like that DBS can buy or not? Wow, the share price go up. Do you think it can go up higher? So if you think can go higher, then can I buy it? Because there will be free one share of bonus share from DBS. And since there's one free bonus share of DBS, and if DBS is trading at $34, wow, I will get another $34 per share free. Wouldn't I profit from it? Oh, the truth and the fact is that today I'm going to share with you the truth and fact of corporate actions. And more importantly, there is also an implications of bonus issue, which like what Leslie has shared can be a gimmick. There are some things that we need to take note of. And more importantly, there are some other corporate actions, like for example, rights issue. Rights issue has been a very frequently talked about topic because rights issue can cause every individual shareholders to suffer share dilution. When we talk about share dilution, it could mean that we can suffer unrealized losses. So in this perspective, I'm not going to just share about the good thing about corporate actions like dividend or bonus, but I want to share also the pitfalls and also the understanding on why sometimes after certain corporate actions that have happened, the stock market share price drops or plunge even. So today's session, I'm going to break into 3 different portions to talk about different kind of corporate actions. So what are corporate actions? Why do I use this term corporate action? Corporate action is defined as an activity that brings a material change to an organization, okay? And also that impacts on stakeholders. Stakeholders, majority of stakeholders is actually shareholders, okay? Majority are shareholders, either common or preferred. These are very technical definition term. But generally, before a company can issue an activity that brings a material change to a company, okay, material change in terms of financial numbers, okay, it is usually a financial numbers material change. So before they can take any corporate action, they must go through a general meeting or to go through approval from a board of directors first. After approval from board of directors, then they need approval from the shareholders. So namely, like for example, dividend payout, before a company can pay out dividend, they need to get approval from the shareholders through AGM, okay, annual general meeting. So these are very technical details, but I think it's also important for you guys to understand that not all companies pay dividends or do corporate actions. It depends on various circumstances. Circumstances depending on the proposal by the company CEO or COO or CFO, or eventually it need approval also from the board of directors and also the shareholders itself. So this means that all corporate actions need approval, and you need to be aware because you being a shareholder, you are actually part of the company. You are a stakeholder of the company. So therefore, it's important to understand what corporate action is about. And today there are a lot going to be a lot of corporate actions a company can participate in. They can propose, namely dividend payout, capital distribution, bonus issue, which I talked about, share split, share consolidation, rights issue, or even warrants issue. And of course, there are a lot of other subcategory corporate actions, which I will not discuss over here. But generally, these are the 7 corporate actions most company will do. But because of so much corporate action and due to time constraint, it's impossible for me to go through every individual one. So I purposefully only pick 3 corporate actions to talk about, which is the more popular or more attention that is needed to be. For example, dividend payout, most popular one. A lot of people are wanting to invest in the market because of the dividend payout. I'm one of them. And bonus issue, which DBS recently raised a question to let everybody get excited about. And of course, the one that can cause huge share dilution is actually rights issue. How do we handle rights issue? And definitely later on, I will spend more time to talk about rights issue because rights issue is a more complex matter. Okay, so we'll be breaking out these 3 portions, and every portion I will take a small break to ask you guys questions. If there's no questions, then I'll move on to the next portion. Now, before I want to talk about corporate action, do you know that companies actually announce corporate actions? And how do we know corporate actions? Do we just rely on newspaper? Guess what? My father relies on newspaper. So whenever a newspaper reports a certain company corporate action, then he will know. But very generally speaking, usually the market has already moved. So those who rely on newspaper could have already missed out a head start. Okay, they will miss out a head start of knowing the information. So the fastest way to know the information of how when a company announce a corporate action is through the exchange website, www.sgx.com. At www.sgx.com, when you see the website, there will be a top column bar. What you need to do is you put your cursor on the word securities, and then after putting a word on securities, you'll be able to see under the category, the column called company information, there's a corporate action for you to select. So click on corporate actions, then you will be able to come to this page called corporate actions. And at the left hand side, there's a filtering function which are my arrow points right now. It filters company that are interested. For example, DBS. You type in the company, DBS space group. Then you will list on the right hand side the whole listing of DBS recent corporate action. Okay, so this one I retrieved actually last week. So when I retrieve this information, these are information last week. For example, how to read all these various columns of the announcement of corporate action. Okay, first column is the type of corporate action. Namely, you will see the first one is actually the bonus issue from DBS. Below bonus issue, there is dividend payout. This is the type of corporate action. Okay, and of course there is an X date. Later I'll explain what do we mean by X date. Okay, and then there is a payment date. Later I will explain more. And there's a particulars on the details of the corporate action. So information are transparent, is available everywhere. Very often my clients like to call me, but over time, if I can, I teach them to use this website. And especially like my father, I teach him, hey, Dad, actually use this website can already. No need to purposely go and buy newspaper. And anyway, if you purposely go and find newspaper, the information can be a bit late already. So having this knowledge on where to find a corporation is important. Okay, so if you want to take a picture of this slide, please take a picture because I'll not be sending all these things to you. Okay, so I'll move on. Let's start talking about dividend payout first. Now, dividend payout is the most common corporate action company give. Why? As a shareholder, we like to receive a reward for being loyal to the company. Meaning loyal means that I hold on to a share, I trust the company, how it perform. And if I trust the company on how it perform, there are expectations. I expect the company to make money. And when I expect a company to make money, I expect a company to earn money. And when I expect a company to earn money, I also wish that the company will share part of the profit with me. So therefore, dividend is one of the most popular method that corporations use to reward the shareholders. Okay, so some companies, like what I shared earlier on, they need approval to pay all corporation, including dividend payout. Some company decided to mandate that, okay, we have decided the minimum amount of dividends to pay every year can be 10 cents, 5 cents, 10 cents, and so on and so forth. And this can be proposed during the general meeting itself. So such corporate action can be mandated, especially for dividend payout. And this can become a regular payout. For example, REITs, Real Estate Investment Trust, has the most frequent dividend payout. Majority of them pay dividends every quarterly. Why they are able to pay every quarterly is because they have mandated, okay, during the AGM that, okay, every quarter will pay a certain sum based on the percentage of the earnings of the company. So these things can be mandated, and that's where regularity will come in. As a shareholder, I hope that whatever money I invested in company, it will be functioning like a bank that pays me interest. And if it does that, then I can use it as a recurring income for my expenditure, my life, and so on and so forth. Okay, so that's the reason, main reason why company pays dividend, just to reward shareholders. Now, so how to understand the dividend payout? Okay, very simply, when you go to the HGX Corporate Action website after searching for DBS, you will see this table. Okay, so now I'm going to share with you how to find and how to read dividend payout, especially the column where the type is dividend. Now, the main question a lot of people ask is this: Jay, DBS pay dividend, like what I shared earlier on. So how much dividend they pay? So how to read? You go to a particulars column. At the particulars column, you'll see the word right rate SGD 0.54 per security. Per security means per share lah. Okay, so this is a 54 cent. So if you own one share of DBS, you get 54 cents. But the minimum shares that you can buy in DBS is 100 shares. So 100 shares times 54 cents, you'll get $54 as dividend. Okay, so when will they determine the dividend shares? There's this thing called the X date. Okay, so X date here implies 5th of April 2024. What does it mean? It means that if I buy DBS share on 5th April, I will not receive dividend. I repeat again. X date means that if I buy DBS share on 5th April, I will not receive dividend. So people who buy DBS share on 4th April will receive dividend. Okay, so this is what I mean by X date. So when we talk about X date, it can be true for all corporate action. Okay, majority of corporate action will have an X date. Okay, then the next column that we need to take note of is the payment date. A lot of people say, hey, Jay, the company X already, how come today I check my bank account or check inside my trading account, there's no dividend payout of 54 cents to me? The answer is simple. Because the company need time to process the database who are the shareholders who are eligible on the 5th, after the market close at 4th April itself. Okay, which is actually in this Friday, okay, in this Thursday. So this Thursday, they will receive all the data after market close. Then on the 5th April, then they will start processing one by one to see who is eligible to pay, to get receive the dividend. So All these are manual work, administrative work is needed to be done. So therefore, it usually have a later payment date, okay, which they can give instruction to the banks or the CDP to throw all these payment out. Okay, so in this case for DBS is on the 19th April, okay, 19th April. So meaning right now, today, 2nd April, if I buy DBS, I will be eligible for dividend. Tomorrow you buy also eligible. Okay. Thursday you buy also eligible for dividend. But if you buy on Friday, you will not on Friday, 5th of April, you will not get dividend payout. Okay. So this is what it means by X date. So typically on your trading platform, most of them will indicate some symbol. For example, DBS will indicate a CD. CD stand for come dividend. Come dividend means the coming dividend. Okay, dividend is coming. If you see XD, okay, XD means that already X date already. You will not receive dividend. Okay, so that is how you read the trading platform. Okay, depending on different provider, then they will put the word corporate action, CD or what, okay? Now, so now we understand how to read the corporate action of dividend payout, okay? So what is the implication and what is the impact to corporations and shareholders? Okay, like what I shared earlier on, the corporate action will have impact both to the corporation and also the shareholders. So for corporation, dividend is paid out through company reserve or companies retain earning. So when company makes money, okay, when company makes money, they will have retained earning. But if company lose money, they will have no retained earning. Okay, so retained earning will go into company reserve. So if the company is not making money yet paying dividend, the company is actually drawing from the reserve and payout. Just like our Singapore government reserve during COVID-19, a large sum of money is being drawn from company reserve to help Singaporeans to tie through the period of COVID-19. So similarly, some companies, though they are making losses, they can pay dividend. But generally, they are actually cutting and reducing their reserve, meaning they are reducing the company's capital. So when you reduce the company capital, the value of company will also be reduced. So if value of company reduce and the company is not making money, over time the company will get smaller and smaller. So when company gets smaller and smaller, what do you think the implication of the share price is going to be like? The implication will be the share price will drop lower and lower. Okay, so there are a lot of examples, but today, because of lack of time, I will not be quoting examples of companies that not making money but still pay dividend. Okay, which is not a good case. So that is something that I want to point out to everyone. When we buy companies that pay dividend, to make sure company makes money. Okay, if not, it is actually taking its own capital to pay to the shareholders, which is not healthy. And for shareholders, I think very straightforward, we will receive cash, we will receive dividend. Okay, so sometimes there are some special schemes. Okay, for example, DBS during the COVID-19 situation in year 2020, it allows shareholders, instead of receiving cash dividend, it can allow the shareholders to receive scrip dividend. So in particularly 2021, year 2021, on 10 May, which is the X date, DBS proposed dividend payout, but over here it read as cash option. So if you click on this word cash option, okay, then you expand out to another website which will explain to you as follows. The amount of dividend that is being declared is actually 18 cents per share. Okay, 18 cents per share. You can choose to take cash, which is the default option, or you can choose to not receive cash, but use the dividend to reinvest, to buy DBS at $29 54 cents. Okay, so this is what we mean by scrip dividend policy. It gives shareholders an option to receive shares instead of cash. Okay, so this is how this thing works. But then I have a question from HH asking, hey Jay, just now there's one column called record date. Okay, there's one column called record date. I didn't explain this. Okay, record date for us individuals not really relevant. Okay, but for businesses, if business buy shares in the stock market, how the accountant going to account or book this dividend payout? Okay, so there is this record date to allow the accountant to decide that, okay, we should book it as a 8 April, the company receive accrued dividend payout. Okay, so record date not really relevant for individual shareholders. Okay, we no need to do a bookkeeping. We no need to declare our dividends to IRAS because IRAS automatically will know. Okay, so anyway, dividends are not tax exempted, so also so IRAS also will want to know. So there's no point having a record date for us. So thank you for question. Very good question. That is what commonly been asked when I show this page. Okay, so moving on. So what is the implication to stock market share price? I think share price is something that a lot of us are very concerned about. Okay, now when we talk about implication of share price, I can only tell you that we have to make some assumption. Okay, so assumption is that we assume that on the particular day when the share goes ex-dividend, okay, when the share price goes ex-dividend, it's not going to be affected to market sentiment. And when it's not affected by market sentiment, during the ex-dividend day, what will happen to the price of the share? Okay, usually we'll be able to calculate that the price of a share will be based on this what we call theoretical price formula. The last time price, that means before ex-date CD price. Okay, for example, like DBSR, 4th April. Okay, let's say the last time is $36. And dividend payout minus dividend payout, which just now the dividend payout, how much? 54, 54 cents. Okay, 54 cents. So let's say $36 after X dividend payout is 54 cents. We take $36 minus 54 cents, we will end up with $35.46. So meaning the next day during the X date, share price will naturally be heading towards $35.46. Okay, wow, Jay, all these are words, no numbers and stuff. Now I'm going to share with you a live example. Okay, I'm going to use chart to show clearly to you how it looks like. So this is DBS. I'm going to use the past, okay, dividend payout because upcoming one, 4th one, I cannot show straight away. Okay, so it's only next week. If you attend, there'll probably an update. Then you'll be able to see the latest dividend payout. Now, this example is on the X date based on X date of 14 November. Okay, 14 November, and the dividend payout is 48 cents per share. So on 14 November, that means the X date, okay, the X before X date, one day before X date, which is 13 November, the price of DBS share is $33.17. So to calculate the theoretical price, I take $33.17 minus 48 cents, you'll get $32.69. So meaning on the 14 November, the price of DBS should be priced at $32.69, meaning share price will sure drop. Okay, so as you can see in this chart, the example is very clear. The next day, the share price dropped by around 47 cents. Okay, quite close one. Usually it's quite close. So the average trading price during that day is around $32.70. Okay, so sometimes when company pay very bumper dividend payout, I will receive phone calls from my client. Hey Jay, how come DBS suddenly dropped so much today? Is there something wrong with DBS? Is there any news that I didn't know? Okay, so usually I will check the first thing you check, is it a dividend X date? Okay, usually on the trading platform, we'll be able to see XD. So when I see XD, I check the X date, then I can inform a client, hey, actually today X dividend. So it is perfectly normal for the share price to drop. Okay, so the implication of dividend payout is that when company pay dividend, the company size shrink by 48 cents. So when company size shrink by 48 cents, do you think the share price should shrink by 48 cents also? Logically speaking, yes lah. Okay. So I have clients who say, hey, wow, Jay, now DBS dropped to $32.70. Yesterday, $33.17. Wow, suddenly dropped so much, means DBS cheap right now. Then because they said DBS cheap right now, they went in to buy. And to their horror, generally speaking, because of no dividend as an incentive for people to buy into a company, generally speaking, okay, usually what I've noticed is that after that, after X date, usually the market momentum will be negative reaction. Okay, the share price will usually be dropping down further. Okay, is it coincident? Yeah, it can be both a market sentiment kind of issue plus no incentive from dividend payout. Okay, so before dividend payout, a lot of build up interest. People are interested to buy a company, but after no dividend payout already, a lot of people, I don't receive dividend, what for I buy? I'm not interested. That's why there's a tendency that the share price will come down. Okay, so don't be surprised. DBS on Friday, the share price going to drop by 54 cents. Okay, don't be surprised. Remember, X date is 4th April. 5th April, theoretically, share price will drop by 54 cents. Okay, that one question by HH, does this always happen? I would say majority of time, 70 to 80% of time. Okay, 20% of time is because positive market sentiment. Sometimes the share price goes up more than 54 cents. Okay, or sometimes the share price only go up by 30 cents or 40 cents. Okay, it depends on the day market sentiment. That's why when I say theoretical price, we must assume there is no if impact of market sentiment. Okay, so observe yourself whether whatever I say is true or not. I think DBS is the best example for you to see in this coming Friday. Okay, so let's not be short, because really. So the question right now that people ask is, so like that, I buy a company for dividend when the company gives CD saying that DBS is going to pay 54 cents. Actually, over time, I wouldn't actually benefit from 54 cents. What? The answer is yes. Okay. So usually people, after knowing dividend is so much, they will start to speculate and start to buying into a company, which cause the share price to go up. So if you are late into buying for dividend, chances that you may be buying on the higher side. Okay, so if you are late, my personal experience opinion is that, yeah, wait for market reaction wait share price after react already, then consider lah. Okay, but if you think that, hey, I want to be a long-term shareholder, I don't mind, I understand there will be impact, then it's fine. Because there are times that I see CD, I think the company pays 6% dividend, then it will be okay, it's fine. It's not going to be a big impact in drop in share price. I'm okay with it. I can accept it. I actually can buy. Okay, but from my personal experience, usually companies' corporate action or dividend payout are pretty fixed. Okay, so if I'm expecting companies to pay good dividend, usually I will buy before their earnings reporting. Okay, I will buy before. But how to buy before? You need to study a company. You need to look at the track record. You need to spend time to it. Okay, nobody is going to tell you it's coming. You have to observe it. Okay. Okay, so if you have any questions, please feel free to ask, and I'll make use of this time to answer a question. Okay. Kim Key asked a question again. J1 is record date. Okay, ask me to repeat. Okay, very quickly. Record date is just a date. Okay, over here, record date. It's just a date for accountant to account into their accounting books. Okay, as individual shareholders, we no need to report our accounts to income tax or ACRA. No need. So generally speaking, we no need to use this record date. Okay, but if you are accountant of company, or if you are doing a record for a company that owns shares of DBS, then we use this record date on the 8th April to account that the company has received accrued dividend. Okay, that means incoming dividend. But on the 19th, then it come. Well, sometimes some company, the reporting date is in between 8 April or 19 April. It can happen on. Okay, so I don't go into very accounting terms, but generally speaking, we no need know. Okay, that is not important for us individual shareholders. Okay, so if you have any questions, please feel free to ask while I have some water. Thank you. Okay, so that's a topic on dividend. Pretty straightforward, but in the end, the implication of corporate action is that actually dividend payout in terms of share price, will a shareholder really benefit through share price? The answer is no law. It's like zero-sum game. Okay, but at least what I can say, at least the dividend goes into our pocket, goes in your bank account straight away. Okay, so that's the key difference. Because share price, if you don't sell the share, you will not if you don't sell the share, you will not lose out actually over time. Now, let's talk about bonus issue. How to handle bonus issue, which DBS is in the same upcoming bonus date coming. Okay, let's understand why does a corporation want to issue bonus share? What's the reason? Now, the main reason of bonus issue is to reward shareholders. Okay, because shareholders, wow, I have been a long-term DBS shareholders. I've been holding DBS like 6 years, 7 years. I'm loyal to a company. I want DBS to do well also. But over time, I see as the company grow bigger and bigger, I hope to get more and more reward. So I'm very glad that DBS has choose that this year they announced to give bonus issue. So it's a very big reward for me. Okay, that's one of the reason. And the next thing is that, but DBS can pay dividend. Why choose bonus issue? What's the difference between bonus issue and dividend then? Because both are rewarding shareholders. Now, bonus issue in this case is giving shares out, meaning they issue new shares. They created new shares to issue and give to shareholders. So when company issue new shares, there won't be any cash involved. Okay, maybe some admin fee to issue to go for to declare in MAS they are issuing bonus, all these administrative, yes, no doubt there are some cost to it, but comparing to dividend they need to literally take out cash from their bank account and issue to shareholders. But in bonus issue, they no need to take out any cash to give the shareholders. Okay, so the key thing about bonus issue is that no cash or no material change in their cash balance in terms of accounting numbers. But what will change is that there will be more number of issued shares. So when there are more number of issued shares, there will be more shares that is available in the market for people to trade. Okay. And is there any material change? Will there be any dilution? The answer is no, because it's free, it's given to you. You don't need to top up money or what. So there's no dilution. Okay. So generally, some companies decide issue bonus issue instead of dividend. For DBS, very good, they issue both. But there are companies that say, hey, actually they used to pay dividend, but they over the years they realize that, hey, actually I want to expand my business. I don't want to give out my cash as dividend, but yet at the same time I still want to reward my shareholder. So therefore, they will choose bonus issue to reward the shareholder because it will not reduce the amount of cash on hand. Okay, and they can use the cash on hand to expand their business. So bonus issue generally is a good thing for a business because there's no material implication. But on the other hand, for shareholders, okay, before I talk about shareholders, okay, let's understand how to read a bonus issue from XGF's website. Okay, now for example, I'm going to use Sing Investment and Finance as a quotation. Okay, because this is one of the latest bonus issue last year. Okay, which I find very interesting to share with you guys. Some examples that in the past, so that you can see the latest impact on share prices. Okay, so Sing Investment is issuing bonus issue. You see that the ratio is this. For every 2 ordinary share, they issue 1 bonus share. Okay, just 2 share, like you own 2 share, you get 1 bonus share. DBS, you own 10 share, then you get 1 bonus share. So Sing Investment is really giving big bonus. Okay, and when is the X date? Okay, same thing as dividend. There is always an X date. It's on 12 May. 11 May, you will not receive bonus. 12 May, you will receive bonus. Okay. So there is also a payment date. Okay, payment date means that when you will receive the 1 share, the bonus share. Okay. So you don't receive the bonus share at X date, but you receive the bonus share only on the 23rd May. I think this is very important to help everyone. Some people very eager to sell the share after X date. So I have clients after X date, like say Sing Investment. After X date, he assumed that he will receive 1 bonus share. So instead of selling 2 shares that he had, he sell 3 shares. So when he sells 3 shares, the brokerage firm say, hey, actually you don't have the extra 1 share. And because you don't have the extra 1 share, that 1 share is considered as short sell. And when you do short selling, you want to cover a short sell, you have to incur costs itself. Okay, so please do not make this mistake. Make sure the share is being debited into your account first. Check your CDP account, check your trading account. If the share is in, then you sell. Okay, if you are so eager to sell, then you sell your 2 ordinary share first. You don't sell the bonus share first. Okay, you pay 1 more brokerage fee. So that is something that we really need to take note of. Okay, because this corporate action bonus issue, really a lot of people didn't really understand. So I want to do this session to help people to understand, especially the upcoming DPS. Everybody asking a lot of questions. Okay. So what's the impact to both the corporate and shareholders? Like what I shared, the corporate, okay, will not have material implication except for accounting implication. Some accounting implication is their retained earning, okay, will be deducted. Okay, so instead of same as dividend payout, they will deduct away the retained earning. Instead of deducting the balancing on the cash on hand side, the balance will change is the number of issued shares, which will increase itself. Okay, so generally no big material impact. Okay, there's no material impact, but only accounting impact. But for shareholders, we will be very glad that we'll receive more shares. And when sometimes, like for example, Sing Investment gives so much, when it increase amount of market float means that the buyers and sellers, there are more quantity in transaction. Okay, some people like to buy companies that is heavily traded. But if the company does not have a lot of shares that is floating in the market, there will be very low transaction. For example, Sing Investment. You can go and observe Sing Investment right now. Okay, in this period, you see that the transaction, the volume is very little. You look at the chart, it's a lot of horizontal line. There's no transaction in various days. Okay, but after the bonus, they start to have a bit more. Okay, another advantage for shareholders is that because of free share, your cost price per share, okay, like for example, Sing Investment, 2 share, now you become 3 shares. Let's say for the 2 shares, I spend $2 to buy. Now I have 3 shares. I take $2 divided by 3 shares, okay, which includes a bonus share. I will have Instead of $1 per share, now I will have around 66 cents per share. Okay, around 66, should be 66. Okay, that means you get a cheaper cost price already. Okay, so this is a formula to calculate, especially if you want to calculate for your cost price. But generally speaking, for most trading platform, they will automatically calculate for you. Okay, but I prefer to do manual. Okay, because this is an exercise to train my profession. So the next thing is the implication to a share price, which a lot of people want to know. Okay, now in the same scenario, same as dividend payout, okay, let's assume that the market is not affected by sentiment. So then, since it's not affected by sentiment, then we can calculate the theoretical price. Okay, so the theoretical price is based on this formula. Last time times the number of existing share divided by the existing share plus bonus share. Same, pretty much the same formula as how I calculate my cost price per share. Okay, cost price per share. So let's use Sync investment as an example. Okay, those numbers, or you see the case study will be more relevant, easier for you to understand. Okay, so you see Sync investment, the share price has been trading around $1.60 to $1.70. Okay, then there's one day it suddenly plunged to $1.102. Okay, in fact, the share price right now is 102. Okay, start until right now. Okay, why there's a sharp drop in share price? The reason is very simple. Because of bonus issue, for every 2 shares, you give 1 share. So the price before X date is $1.57. Okay, so in the price before X date is $1.57. So the theoretical price will be at that 1.57 multiplied by 2. Then divided by a total of 3 shares. That means the average cost price is $1.47. Okay, that's the theoretical price. So on the 12th May, which is the X date, naturally the share price will drop by towards the theoretical price. Okay, so the share price actually dropped by 53 cents. Okay, and it close to the theoretical price of $1.04, $1.05. Okay, that's been assumed that there is no market sentiment affecting the share price. Okay, and why I want to Sync investment is because definitely there's no market sentiment affecting, because it has been trading very flat manner for a very long time. Okay, so don't be shocked when DBS X is bonus payout. Okay, it can cause a deep drop in share price. Okay, so in fact, if I take away if you look carefully this Sync investment also about the same situation with DBS. Okay, do you see this period? The share price will drop. It dropped because of the dividend payout of 10 cents. Okay, so there is this theoretical price usually will work on. Okay, usually will work. So every time I explain to my client, I say, okay, if you want to buy DBS, because of bonus issue, you go and buy, then do expect the share price to drop. Okay, don't expect share price to increase after X date. Okay, so don't be surprised that when during X date there will be a sharp drop in share price for DBS. So Sync investment here is a very clear example for you guys to be. But for DBS, it's not going to be as sharp as Sync investment. Okay, but there will be a price drop again. So generally speaking, because of the lack of incentive for bonus issue, after the X date, generally the share price will be coming downwards one. Okay, just same impact as dividend one. Okay, so if you are eager to buy DBS, then probably I may want to choose to buy after bonus. Okay, and some more if I buy DBS before the X date, I only receive the extra 1 bonus share later on. Okay, a few days later, the share price could have already dropped. Okay, there are some people ask me, Jay, so what's the reason why the share price will drop? after bonus issue. The reason is this, because they give free share ma. So some people want to lock the money out from free share. So generally, after the payment date, the share price will usually be more depressed one. Okay, usually more depressed because there will be people thinking of selling, okay, the bonus share. They want to continue own the 2 share of Sing investment. Okay, so that's the implication. That's something that you need to take note of. Okay, especially for DBS. What's the date again? DBS. Sometimes I need to really. Okay, DBS. The bonus X date is on 22nd April, which is 2 weeks time. Okay, 2 weeks time. The payment date is end of the month. Okay, so something for you to observe. That's why I want to talk about this topic in this month, because this is something that immediately you can see the impact. Okay, so in conclusion, generally speaking, bonus issue, if you want to buy because the company B give bonus issue, in the longer run, after X, there won't be much difference. Okay, there shouldn't be much difference. Okay, and if you want to speculate, okay, then you speculate during the period where people are excited about the bonus issue. But please, if you want to make a price difference, then you consider to want to liquidate your position before X date. Generally, this is how people trade the bonus issue. Okay, so if you don't want to liquidate, you want to become long-term shareholders, generally speaking, bonus issue wouldn't have much material change eventually. Okay. So how to really benefit from bonus issue? Is it just like that? How to benefit from bonus issue? The best way to benefit from bonus issue is that you don't chase the bonus issue. Okay. If you got a good company, you know this company is making good money and they always have good dividend payout. I think that is the best priority. Anyway, you can't expect a company to give bonus issue, or you can't predict whether a company is going to give bonus issue. I think the best marker is always based on whether the company has capability of earning good amount of profit consistently over the years. If they are able to earn consistently over the years, and if they want to expand a business, chances is that they are going to do something about their reserve, their retained earning, using bonus as a reward to shareholders. So best is buy way before they announce the bonus. Okay. So usually bonus are being declared during their full year reporting season. Okay. DBS full year reporting season is in the month of February. So if you have bought DBS last year, in fact, actually I've advised some clients to buy DBS last year during the month of October, November period. So now they are very happy. Aside, there are some clients already January, February, they already sold it off, but now went out. Okay. So generally, the bonus is more for investor. Like for me as an investor, hey, I got extra. I'm very happy about it. Okay. So before I move on to the last topic, the rights issue, which I'm going to spend a bit more time talking about. Okay. But I'll pause here for a moment for any questions and I'll answer the questions. Okay. So one questions. So for a shareholder, would it be more beneficial financially to get dividend rather than bonus share, as bonus share will dilute the market and potentially reduce the share price? I don't have a clear answer to your question. Okay. Now, it really depends on individual objective. Okay. Like for me, my main objective when I want to buy and hold a share as an investor for long term, I want to make sure that while I'm invested in company, I will be rewarded in terms of cash. Okay, why? The reason is very simple. I can choose to put my money into a risk-free asset and to comparing to this share which is more risky per se. And if I put in risk fee means that I use one best comparable, I let's say CPF, okay? I can put my money inside CPF ordinary account because I'm self-employed. I can voluntarily put to a cap level. Okay, let's assume no cap. Let's assume that DBS, no, the CPF interest rate is 2.5%. I can, if I put my money in CPF, I will earn 2.5%. If I put my money in shares, if the shares doesn't pay me 2.5% per year, I might as well put my money inside CPF. Or let's say special account, 4%. I can choose to put inside a special account. I can put inside ordinary, then from ordinary I transfer into special account, and I can get 4%. But why I want to put in a share that cannot earn 4%? So therefore, my priority is always towards looking for companies that pays me very good dividend yield per year. So once I have this objective in mind, definitely like the question being asked earlier on, I will skew towards saying that I will have more financial benefits from dividends itself. That's my personal perspective. But I have clients who is really rich. They got involved in all sorts of assets. What they want to do is about accumulation. They are fighting for accumulation, not fighting for high rate of return. Then the case will be different. If the company give them bonus, now I got more shares in the company, and more shares in company, I can just continue to hold on for a longer term and stuff. It's more benefit for them in that sense. Okay, so yes, perspective based. That's why I cannot have a clear answer. But generally speaking, based on my personal perspective, I will think that dividend will be more beneficial for me because I can use my dividend to pay for my holiday. I cannot use my bonus share to pay for. I can sell the bonus share. Okay, but when you sell bonus share, the share price also adjusted, so no much change. Okay, eventually. So it's still the dividend side. Okay, so thank you for your question. Let me take a quick water break. Okay, so let's start to talk about last portion, last topic on rights issue. Now, rights issue is one of the thing that is very challenging to a lot of investors. Okay, and it can cause a lot of complaints, can cause a lot of financial losses, and this is something that when you are involved in shares, this is where we need to take note. And guess what? I have a lot of clients don't even understand what is rights issue, and when they don't understand, they don't bother. And when they don't bother, they come back to me, hey, Jay, how come the share price dropped so much? I said, actually, recently got rights issue. Got rights issue, you got to go and subscribe. You got to subscribe, then you won't lose out. Then the client said, hey, I didn't subscribe. Like that, how? I said, if you didn't subscribe, I also cannot help you already because your shares suffer dilution. So then the client sometimes said, for me, sometimes the client will say, Jay, why you never tell me in the first place? Then I don't know how to answer them because when the shares are in CDP and when the shares are not managed by me, I can't monitor them. And to be honest, how can I monitor for so many of my clients, every individual, inform them? As far as possible, I try my best, but I can't 100% cover every client. And that's why I find that these are responsibilities that within clients. But of course, for my clients who are under my wealth management, and Andy has introduced me as a wealth manager, the shares are parked under my care. Definitely, I will spend more time to take care and advise my clients on how to handle all these rights issue because I'm being incentivized for it. So these are things that I think it's important for me to educate and help everybody. And if you want to manage your own investment, I think it's important to know how to handle rights issue. Okay, so this is a bit of background to help you guys so that I can talk about this topic more deeper. So why does a company issue rights issue? I think the main reason very simple is to raise capital. Okay, so in order for company to raise funds, raise capital, they can issue new shares. So rights issue is a way of issuing new share. And why use the word right? Actually, when you got a right share, it gives you a right to purchase new share. You can also choose not to purchase a new share. Generally, when you want to purchase new share, the new share will be at a discounted price. Okay, so sometimes some companies decided to raise cash to expand a business, but there are also companies raise cash to reduce their debts, especially in recent time where the interest rate goes up. Like for the past 2 years, a lot of REIT, Real Estate Investment Trust Fund, they raise rights issue, and this caused a lot of dilutions in the share price itself. Okay, so to understand the rights issue, same thing on the particulars, this is the ratio. Okay, it's important to understand the ratio. So in this case, it means for every 1,000 ordinary share, you have 323 rights share. Okay, now you must understand the terms are different. Ordinary shares means the shares that you own. Right shares is not the share you own. You own right share. And every right share gives you a right to convert the right share into ordinary share. Okay, so later I'll talk about the conversion price, or what we call the exercise price. So in the same manner, there's also an ex-date, okay, which is here, the example by SATS is 1st March 2023. Okay, the purpose of this rights issue for STS is to expand their airport services to where, if I'm not wrong, should be UK last year. Okay, so there's an ex-date. So if you look into particulars, you will see that you'll write as 323 SATS Limited R. Okay, usually a name will come with one R for every 1,000 SATS share. And to take note of this word, you will see this word, right securities are tradable. Tradable means that you can sell your rights in the market. Okay, sometimes some company issue right issue that is not tradable, meaning you cannot trade. So if it's tradable, they will write down a trading period, which is 7 March to 15 March itself. Okay, so this kind of tradable rights, we call it new pay rights, meaning you can sell away these rights to someone who don't own SATS, and the someone who don't own SATS, they can convert the right to purchase new shares of SATS. Okay, sounds confusing, okay, but let me try to simplify as much as possible by explaining the implication, okay, the impact of to corporate and shareholders. Now, for corporation, very straightforward, it's just new cash injection that have new that can have new shares. Okay, but of course, the number of shares that is going to be converted depends on how many people exercise the rights. Okay, sometimes nobody want to exercise the rights. Why? Because maybe the market share price is trading below the the exercise price. Okay, that's another story. Okay. As for shareholders, that's where the complication come in. You see a lot of words over here. Okay, the key word is actually shareholders have a right to exercise, okay, or to sell it in the open market, given that it is a tradable right issue. Okay, so if you've been a shareholder of the rights issue, fails to exercise the right, you will lose out. There will be dilution. Okay, why? Because the right share will expire and become worthless. Worthless means zero value. Okay, zero value. You cannot get back any single cent. And rights will only be worthy to subscribe. Okay, so to benefit from rights issue, it is best to subscribe. Okay, either you subscribe or sell away your rights. You pass the right to someone else. Okay. And it will be only worthy if the current market price is trading higher than exercise price. Let's say if the exercise price is $1, okay, exercise price is $1, meaning to convert to ordinary share, you need to pay $1. If the market share price is trading at $1.20, means that this exercise price is at a discount. So if I buy at a discount, it's worth for me. However, if the market price is at 80 cents, if the market price is at 80 cents, I might as well buy the actual share from the open market at 80 cents instead of exercising the rights. I would rather forfeit the right issue. I buy for open market itself. Okay, so that is the situation where exercising right issue is not worth it. If you don't understand this, please seek your personal remisier, broker, trading representative, or whatever. You ask them, okay, whether is it worth to subscribe or not. If they don't know how to answer you, then please go and seek someone who has knowledge, okay? And you know, obviously, I understand how this thing works. Okay, so when we exercise right, we need to spend time to calculate our new average price. Okay, so the new average price, this is the formula, the cost price of what we hold on. Okay, so cost price multiplied by the number of existing share, then plus the exercise price, the number of rights share, divided by the number of existing share plus the right shares. Then you get cost price per share. Okay, so a little bit more complicated for rights issue. That's why it's something that a lot of people find it hard to handle. That's why there are professionals like me around to really help advise the client what to do. Okay. So to exercise the rights, okay, just want to talk about exercising the rights. To exercise the right, you have to look at this. Okay. They will issue when during X date, that means after after the X rights, you will receive the rights issue. After you receive the rights issue, they will announce in SGX website the details of right issue. What is the exercise price? Okay, so when you know the exercise price, in this case, like SATS is $2.20, then you need to convert the shares, okay, by paying $2.20 multiplied by the number of rights you given, 323, which I calculated early on, which will cost you $710.60. This one I haven't include the admin fee. Okay, normally we subscribe rights through banks. Now you can subscribe through PayNow, but there is an admin fee. If I'm not wrong, it's $10. Okay, I think maybe up price will be $12 already now. Okay, so you have to add on to that. Then after receiving your ordinary shares, this is how you calculate your cost price, average cost price. For example, if you buy 1,000 share at $2.50, your cost price is actually $2,500. So you add in the cost of exercising, right? $710.60. You get a total of $3,110.60. Then to find the unit cost, you divide by 1,323. That means your cost price now is reduced to $2.42 instead of $2.50 itself. Okay, so that's the calculation, that's the formula that I showed you earlier on. However, if you find that this is complicated, there is another method. We shall talk about it later. But I want to let you know that it's important to exercise rights, because if you don't exercise the rights will expire. So when you have rights issue, they will mail you letters. Please open your letter box. Okay, inside letter box, they will letter to write what we call offer information statement. Inside offer information statement is very important. They will tell you how much is to exercise the rights issue, how much to pay, how to pay, how many shares, how many rights issue you will have. Okay, there's all the documents and form inside for you to make use of. I think the most important thing SATS did very well is that they write very clearly and highlight boldly when is the last trading day of the rights issue. Okay, because this rights issue can be traded in the market. You can sell your rights in the market. We shall talk about later. But if you decide to exercise your rights, there is a rights exercise date, okay, deadline, which is the 21st March 2023, 5:30 p.m. Okay, there are also ways of subscribing about rights. Okay, so generally bigger company will have more different banks to help them to subscribe rights. But sometimes some don't have. Then that's where headache. You need to find different banks. That's another story to talk about. Okay, so please do consider and take note of the date, because if you fail to exercise rights, it will lead to dilution and can lead to very large unrecoverable losses. But for SATS case, it's still okay because it's for every 1,000 share 323, and the rights price is not too far away, so it's still fine. Okay, so I want to talk about about selling off your rights. So if you sell off your rights, means that you don't want to exercise the rights itself. Okay, so when you sell off your rights, there's a market, there's a trading market. You will see a trading platform will start to show SATS Limited R. That's the name of the rights. There will be a R behind the name. Okay, so you can sell away your rights to someone else at the trading date itself. Or if you are interested in the company, you can actually buy the rights. After you buy your rights, you have to exercise it. If not, no point. Okay, you will lose out money. So when it's traded in market, the market will price it. Okay, who price it? It's actually you or me price it. So logically speaking, just like dividend, just like bonus, there is a theoretical price. So this is the formula of theoretical price. So it's based on last time price minus the exercise price. For example, like SATS, let's say the last time price is $2.50. You minus the exercise price $2.20. The rights price will be 30 cents. Okay, so you can sell off the rights at 30 cents, you will receive back 30 cents. And these 30 cents will help you to offset the dilution in shares. So eventually you do not lose out a single cent. Okay, and you can straight away get 30 cents into your pocket. Although share price may suffer dilution, but you get 30 cents back first. Okay, so if you don't have exercise right, you don't have $2.20 to pay, then you sell off in that sense. Okay. So if you decide that I want to buy rights, okay, I want to take a gamble that over the right period, the share price will increase, okay, higher. You can also take a gamble. You can buy the new pay right, okay. But if you want to buy new pay right, make sure the new pay right price, that means SATSR, is trading below theoretical price. If it's trading below theoretical price, you're buying it at a discount. Okay, but generally speaking, that kind of situation is very, very rare. Okay, very, very rare. Okay, so there are a lot of implications to the stock market, but when the share price go XR, there is a theoretical price that we can calculate. You'll see that this is the same formula, similar formula that I use to calculate my cost price. But I think most importantly, we have to look at the impact of the share price. What do I mean by dilution in the share price? Okay, so this is a case of SATS. Okay, the 333 rights issue for every 1,000 shares, issue price of $2.80. So before the X date of XR, okay, it's trading at $2.83. So I use the theoretical price formula as follows, and it will result in $1.04. Okay, $1.04. So when it's $1.04, what happens is that the next day, after X date, okay, XR date, the share price should drop. Okay, so in this case, it dropped by, sorry, I think my calculation here is wrong. Okay, the X price is 15 cents. Okay, let me double check. Yeah, calculate wrongly. Okay, let me quickly punch my calculator. Sorry about that. Just realized it's wrong. 6.83. Okay, it should be $2.67. Sorry. Okay. Okay. So you will notice that the next day, the share price actually quickly dropped towards the theoretical price, which is $2.67. But on that day, it dropped till $2.68 itself. Okay. So that is the implication. That's what it means by dilution. Okay. The share price will drop. Thankfully, the exercise price and the trading price is not too far. But over time, because of rights issue, when people get more shares, get more rights shares, that means the payment date of the rights. Okay, when it converted in ordinary share, there is a tendency for the share price to go down also. Okay, so in short, okay, I spent nearly half an hour to explain about rights. In short, rights can be a pretty complicated matter. And because it's complicated matter, there is a tendency that people don't like to handle such situation. So when people don't like to handle such situation, it also implies that there is tendency that when company announce rights issue, the share price will be usually on the more depressed side. Okay, that's the tendency lah. Okay, doesn't happen all the time, but tendency to be like that. And because of so many actions that is needed, people may not have the extra $2.20 to subscribe. Okay, so when they don't have, what some people do is they just sell everything. That's why the share price have a high tendency of dropping lower. Okay. Okay, so I have a question coming in. If a company has a record of frequent rights issue, does it mean the company's financial status not very sound? Generalizing. If the company keep on asking money from shareholders, you must understand the reason why lah. Okay. If they are expanding a business, fine. But if the company is always losing money and say, hey, my company, I need funds to continue operate so as not to, so as that there is chance to prevent losses going into future, I think that is not very right. Okay. One of the classical example that I have 10 years ago, okay, is Chartered Semiconductor. Okay. Chartered Semiconductor is one of is doing semiconductor business, one of the biggest semiconductor maker in the whole world at that time now. Okay, one of the biggest. And sad to say, somehow it did not do well. Company has been facing losses. Okay, over years, it has a very good track record on actually. They are not, somehow they did not turn profitable. And when they don't turn profitable, their cash flow has some issues. So they ask right issue from shareholders, which offer the rights price also very far and also offer a lot of rights for shareholders. 1 time, 2 times, 3 times, okay, over a span of 5 years, I think. Okay, so eventually the company flop. And a lot of my clients then, who is, Chartered Semiconductor, very big company and so good. Got rights issue, must support and stuff. They go and buy. So in the end, when the company goes suspend, that's it. Okay. So yes, you're right. We have to be very careful with company that very often have a record of frequent rights issue. Okay. So you may want to use SGF's website to go and search which company has very frequent rights issue. I already share with you. We have to find in the address website. Okay. Okay. So eventually you'll see that corporate actions is something that we need to learn to handle. But eventually, to avoid situation like company frequently having rights issue, chances is that we have to learn how to carefully choose the right kind of shares. Okay. Okay, I have a question coming in. What are renounceable rights? Okay. Renounceable rights means that there is some open-ended things that is happening. You have to find out details because rights really, they have a lot of terms that's inside there. We need to read that carefully before we know how to handle it. Okay, because there are some special terms. Some of them are non-tradable, some of them are tradable, some of them are renounceable, some are just normal kind of rights. There are a lot of terms that is inside. So I can't answer you fully unless you tell me what is a specific company, I have to read into the offer in statement, okay, OIS, which is the most important statement, which a lot of clients don't know how to read, okay. Actually, it's quite straightforward. I read, you somehow can understand. If you're not sure, then it's good to have a trading representative, a reminder like me to discuss lah, okay, because these are corporate accounting terms, legal lingo, and so on and so forth. Okay, sometimes I really need to read a few times before I can fully understand. So thank you for a question. I cannot answer you right now because I have to go and read into the details of that. Okay. Okay, Calvin asked a question. Okay, let me go back. Okay, Calvin asked a question. For bonus issue, if you own 1,000 shares, are we entitled to 100 shares as prorated? Okay, this is, I believe, in the case of DBS. DBS is 10 shares give 1 bonus shares. Okay, so if you own 1,000 shares, you take 1,000 divided by 10, okay, which will give you a multiple of 100. Multiply by the ratio 1. So in this case, okay, 100 times 1 you will receive 100 bonus share lah. Okay, so this is how what it means. Okay. Okay, another question. Can refer a screenshot on SAT rights? We show just now. Okay, so this is the calculation. I just want to share with you all. Okay, sorry for theoretical price calculated wrongly just now. Okay, so eventually, to avoid right issue kind of situation, I think the best way is that you have to choose the right kind of shares. To benefit from bonus, to benefit from dividend, eventually, end of the day, it still boils down to choosing the right kind of shares. So how can you choose the right kind of shares to invest in so that you get the best out of the shares and to avoid situations where you cannot manage well? That's where my course, Making Investment course, will come in to help you to understand all this. In fact, what I share with you today is actually part of the e-learning of the fundamental analysis in this course. Okay, the materials you see over here is part of it is being taken out from there. Okay, from the e-learning portion. So you see, in Making Investment course, we want to help everybody to be able to fully understand what they are investing in. So to really fully understand what we want to invest in, like earlier on the question asked, AJ, so is it financially more beneficial to get dividend than bonus share? I think it's really valid, but you see the manner I answer, it really depends on your objective. So that's where my complete investment process will help us to debuff some complicated decision making in investment. So once we are very clear about what we want, our investment objective, our investment purpose, and also understanding how much money we have, then we can determine what kind of investment style to focus on, or whether dividend is more beneficial or bonus is more beneficial. It's all about investment objective eventually. So the foundation is to understand what you want, what's your purpose, so that you can choose the kind of investment style that is most beneficial to you. Like for me, I prefer to be an investor. Why? Because being an investor means that I can buy and hold, I can buy and forget, which in other words, I call it very passive nature. I don't need to watch the market all the time. I don't need to get too excited about share price going up or even down. And then what's the benefit for me to invest and buy the share and do it passively? That's where dividend can be coming in as a means of profit for me. I don't just rely on price difference. So it's a win-win thing. There's a double benefit. Price difference, I make money. Dividend, I also make money. So investors' point of view is always the best. That's where I practice fundamental analysis itself. However, in the market, I also do understand that God really make everybody different. There are people who like excitement. They want quick money. They want to see quick differences. That's where traders is a kind of investment lifestyle. So they don't mind getting actively involved. They got the time. Anyway, some majority of them may be retired, nothing much to do. They want to use this as a means to as a life objective itself. So that's where technical analysis will come in to benefit these kind of people, okay? Because they want to make money from the price differences itself. So once we understand the different techniques or different investment style we have, then we can boil down into different kind of investment strategy. But of course, I will not spend too much time to talk about different kind of investment strategy. Then once we are very clear, then we can talk about how do we select stock, okay? So for me, in making investment work, like what Andy has shared earlier on, I practice both ways. Fundamental analysis and technical analysis. Some people say FADA, okay? I spend more time doing fundamental analysis because my core is still investor core. So in fundamental analysis, I analyze two things. Analyze the company, understand the company financial standing by looking at company's financial statement like the balance sheet, income statement, cash flow statement. From there, then we'll be able to draw out to understand whether the company is it financially strong. Once it's financially strong, then I compare with the market price. I call it pricing analysis by looking into financial ratios. Then through there, then I'll be able to identify whether the company is attractive or not attractive to invest. Or some people like to use the word overvalue or undervalue. Fundamental analysis in the end will derive all these things. However, there's a fatal flaw with fundamental analysis. Fundamental analysis does not care about what does the market think. I call it the market sentiment. The best way to measure market sentiment and understand the market sentiment is through technical analysis, which is the tool of traders. Traders trade the sentiment. So we analyze the market sentiment by looking at the price chart, identifying the market trend, support or resistance level, and even to use technical indicators like candlestick, moving average line to help you to further understand whether this company, is it the right timing to buy or right timing to sell. Another advantage of technical analysis is that it can give us a more precise price to determine whether is it worth to buy or not. So it sounds that a lot of things are, wow, Jay, like that, huh? The analytical to select stock, like a lot of things. But rest be assured, we can use software like stock screener function, especially in the class we'll be running using POEMS 2.0 trading account. But if you don't have POEMS 2.0 trading account, you can use demo account. POEMS trading account itself has a lot of available tools from stock screeners in the fundamental analysis side to the charting side, technical analysis. So that's why I want to use this as a primary platform, which is free for everyone. No need to pay a single cent. We can have the correct data. We have the very good data in POEM side to help us to do our analysis. And to simplify analysis, it's going to be a very manual thing, okay? I'm not selling software. I'm not here. I'm not a software programmer or what. But I'm here to train everybody to analyze manually. No need computer. Why? Because if you analyze manually using this template to analyze, you will physically go through the numbers of company. Why we need to physically go through numbers is because we need all this to help us to build confidence in our investment. If you press one button and computer tell you the answer, would you be confident that the answer is a full answer without understanding what's the process going on? Of course, by doing this kind of analysis, we have a template. I created a template to help you to identify in terms of fundamental analysis, whether a company is attractive or not attractive. In terms of technical analysis, you will have derive a technical level to have the probability of whether the market is going up or down. All the stock selection process is then simplified. And this will help you to decide whether a company can be purchased or not to be purchased. However, the success of an investment portfolio over time, okay, it's not just one trade. It's about repeated trades over time, repeated consistently year to year. In order to do that, we need to have a proper portfolio management method. Hey Jay, why is portfolio management? Why is it important? Now, very often in the market, for so many years in the market, I have noticed that the key thing to cause people to be successful and not successful in investment is not about the strategy only. It's actually about them controlling their emotions. Remember, I shared earlier on, some of our clients already before the bonus, they sold off their DBS share because they are scared that the share price will drop further. So emotions play a part in our decision making. So that's why in Making Investment course, we will have a topic called behavioral finance to understand our behavior. Once we understand, then we will set a portfolio management system to manage. And this is how a portfolio management system look like. First, you decide what share to buy, which we had talked about earlier on. But after deciding what share to buy, we also need to spend time to decide how many share to buy, the quantity of share to buy, and even to decide whether to diversify the shares. So I'll be talking on the topic on diversification itself. And after that, after you bought the share, you become a shareholder, how do we monitor? How do we know we are receiving dividend and so forth? So monitoring is also one part of the management. And lastly, in order for your capital to grow, you have to learn how to sell. Learning to sell at a profit is something very easy, a lot of people can do. But however, how to maximize the profit? Lastly, there are times that definitely there will be losses in your investment. How do then we cut the losses short and how do we manage our losses? And once the money come back, then we go through the full cycle again. That's the whole portfolio management cycle itself. Okay, so the course with so much things I'm going to learn, there's a full-fledged of how an investor should be like. I can only break down the course into 3 different parts, but each part will have its own focus. Now, for example, part 1 will be focusing in learning how to select stock. And this will happen on the 27th April on Saturday over Zoom, 9 to 6 p.m. with appropriate breaks in between. What we'll focus on is to focus on investment objective to help you to explore your investment objective and also to focus on learning how to do fundamental analysis practically through case study. At the end of the day, you will go through a competency assessment to reinforce whatever you learn. But learning doesn't stop here on just 27 April. Between part 1 and part 2, there will be a 1-week difference. During the 1 week, what I will assign during the 27 April, I will assign you homework to do fundamental analysis yourself and also to provide e-learning for you to do self-learning like corporate actions and so on and so forth. Why I want to do that is because I want to build confidence in yourself that if Jay is not around to guide you, you can analyze yourself. That's very important. So before part 2 starts, we'll go through the homework, answer any questions about fundamental analysis. Then we'll proceed to learn how to time the market on the 4th May, 9 to 6 p.m. also. So we'll focus on technical analysis from learning trend, support and resistance, and candlestick analysis and technical indicator like moving average to identify the market entry point. In a similar fashion, there will be hands-on. At the end of the session, there will be a practical assessment. And after practical assessment, I will also assign you homework on technical analysis, and there will be an e-learning module to accompany you with it. So before part 3, we'll go through the homework. Then after that, we'll go into learning how to manage 2 things. Manage our behavior, what are the behavior we need to manage, and how to manage portfolio. So there will be case study for you to learn, case study for you hands-on, and lastly, there will be a finale competency assessment for you to practice. And this will wrap up the whole course itself over 27 April, 4th May, and 11 May over these 3 days. So as you can see, what I design is that I want to design the course in a way to help you to learn progressively. But most important thing is that there will be a lot of hands-on session, live examples for you to use. Just what you need is to have your own Poems account. If you don't have, we also have videos to guide you on how to open Poems demo account. No need to open a training account. You can use a demo account, and at the same time, we also courier you the training materials before the course date itself. Of course, at the peak of learning, after the 3-day course, many people will say, hey Jay, but if I got question after 3 days, how? No, less to be worried, because in Cybercode, we have created a social media application called CQ Station, where I can use as this platform to communicate with you guys. And what I do in this platform is that every month, I will do a money market review. In fact, on last Sunday, 31st March, I have met up with my online through Zoom with my MIW graduates. And after a course, when complete a course, will also be issued with a certificate endorsed by IBF, and this can open doors for you to enter financial institution itself. So how much is the cost itself, making investment cost itself? It is at a very affordable price of $1,962 after GST. And IBF is here to help you. IBF will be subsidizing up to 70%. If you're Singaporean above 40 years old, you will be eligible for 70% subsidy, which will end up only $702 to pay. But if you're Singaporean below 40 years old or Singapore PR, you still get 50%. So no worries about it. And you can pay by different payment method. But if you have SkillsFuture credit or even NTUC member, you can use the NTUC UTAP funding to offset the cost price, which eventually have a potential for you to pay only $0 for a course. I repeat again, there's a potential for $0 for the course. So with that, I want to encourage you to think about signing up for this coming course. Don't think about, but take the action, turn on your QR code reader and scan for this QR code. Why? Because it's a potential $0 cost for you to learn how to make investment work for you. And to further encourage you, I think the best way is to take myself as a role model, as an example, to guide you to become the best investor you can. So I want to use my own personal time to provide a one-to-one private coaching session after the course. What we can do is that I can even buy you a cup of coffee. If you want to treat me a cup of coffee, I also don't mind. But what we will do is that we will be discussing what you have learned, okay? Or if you are interested to know how to analyze whatever existing investment you have, we can do so together. Or there's a lot of things we can discuss about investment itself. So with so much thing that is given to you and with a potential of $0 and also my personal time coffee session with you, I think there is no question that you should be questioning yourself not to sign up this course. Okay, so before I want to pass the time to let Andy explain to you how to sign up for this course and what are the administrative matters of this course, let me quickly answer one last question that's given. Okay, the question is this. In general, will the share price go up or down before the ex-date of bonus issue? Now, like what I shared earlier on, generally, people are excited when company give bonus issue. Okay, but many of them, they are excited but didn't understand implication after ex bonus. Okay, so generally, due to market trend, market sentiment, generally, people will have a tendency to push the price up. Okay, they will say, bonus share very good and stuff. They will just speculate it out. But many of them may not end up to have positive price difference over time. Okay, so thank you for all the questions, and I'm very happy that I'm able to answer so many of questions this time around. And I hope as far as possible, this session today will enlighten you. But not only just to enlighten you, I think it's really important to know the proper technique to build up a proper investment portfolio that can make that can make good passive income for you. So eventually, my hope is that everybody will know how to make investment work for you. With this, I thank you for your time, and I would like to pass the time to Andy. Andy, please.
Hi, yes, Jay, sorry, turn on my.
Yes.
Okay, can see me? Okay, great.
Yes.
Thank you, Jay, our well manager. Thank you very much for those still staying on for the last almost close to 2 hour session. Now, indeed, what I was just mentioning to all of you here when doing the opening speech, right? Towards the end of session, myself and Jay going to share with you what you are spending in this 2 hour session is never going to waste, right? Because at the end of the day, you're going to actually enjoy, with the subsidy given by the government, particularly we call the IBF, Institute of Banking and Finance, the video we play before we start the class, which is directly care of by Ministry of Finance, we're giving this cost fee subsidy to local citizens as a permanent resident. So wait no more, because like what Jay mentioned, I always mention to anyone who join in for any of the webinar session, especially they come with the IBF funding support, because funding support, the support credit given, whether it's a skill future credit or whether it's an NTUC UTEP funding credit or whether it's an IBF funding support, right? The 70% and the 50% funding support. But this also come with the validity, okay? And we also do not know when the government going to, retrieve back the funding support. Now, again, the other thing also want to just share with you here, those funding support credit actually is all come from our taxpayer money, which is, I think, I believe you're stepping into the month of April. You know what I'm talking about, right? Month of April is a month for us to pay taxes, right? Or income tax, here and there. So, in fact, the grant actually given by the government is the tax collected from all our money, our salary, that we pay to the government to a tax. So it's actually in time. It's just it's another way for us to take it back, some money back from the government, and that's what I always share with the participant. Okay, so take this opportunity to to participate. Like what Jay just mentioned, our making investment work course. Why Jay want to use this name and making investment work course. It's a very simple reason, because if you want to be at the end of the day when you're going through this 3-day class of session, you're able to make your own decision in your investment journal. Okay. Now, I would like to take this chance to run through with all of you here, particularly using the skill future credit. Now, of course, we understand quite a fair bit of you here. You may already start using the skill future credit, but they also maybe have some individuals have not started using the skill future credit. So therefore, I would like to take this opportunity to run through, to sign in with my personal skill future credit account with SingPass, and then to run through with you here, how can you use your skill future credit to fund for it, to pay for it, which means you're using the credit given by the government to pay the cost fee after the subsidy, which is the $702 or the 1062, whichever tier that you fall under, right? Okay. Now also, for those who are quite well versed to join in the course